5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. AI reality check. Apple's cost concerns biting suppliers and peers, dragging global stocks back down. Will that tech volatility potentially hit IPO sentiment? SoftBank shares much lower today on a report OpenAI may be delaying its offering. And traffic holding its course in the Strait. Oil continues to fall as tankers flow through Hormuz following a ship attack. Let's get a check on markets around the world. It's been an incredibly volatile week and we've had our final session in Asia. So Winnie Sue, what is the verdict?
Good morning, Bonnie. As you just mentioned, it's been a brutal week of swings, especially for the South Korean market. We have the Kospi here down about 6%, and it has, in fact, triggered a trading halt today. Now, remember, we have already got 2 trading halts this week, and we've only got 11 trading halts since the beginning of this century. So you can see that the market has become extremely volatile. We have Samsung Electronics and SK Hynix leading the decline, and that's also coming despite the report that these 2 companies will be announcing massive investment on Monday. Now, flip aboard, we take a look at the broader Asia market. MSCI Asia here down almost 3%, taking its weekly decline to the biggest in about 3 months. Now, technology shares continue to drag, especially as Apple decided to raise its prices as it raises concerns around the consumer demand as well as the demand for the chip stocks. Now, we do have another news, as you just mentioned, that SoftBank slumping because of that potential delay from the OpenAI IPO to next year. Back to you, Bonnie.
Yeah, lots going on in Asia. Winnie, thank you so much for the entire week. A lot going on in Europe as well, although slightly more insulated from the chip story potentially, but plenty of political turmoil. Let's get to London now for a look at the Friday session in Europe with Justina Lee.
You're exactly right, Vonnie. Now, Europe is usually not as dramatic as Asia, but we are seeing the Stocks Europe 600 reflecting a bit of that bearish sentiment sweeping through markets today. Now, the euro is a bit stronger, though, but it's worth mentioning that that's a bit of a blip because we've come out of a period of depreciation for the euro, and some of that is because traders are repricing kind of ECB hike expectations, which also explains why German bond yields are down a little bit today. You know, for instance, if we flip the board here, today we got inflation expectations out of the euro area, out of the UK, and both are showing that kind of inflation expectations are coming down, which might give central banks a chance to maybe not do that extra rate hike for the rest of the year. And that's what this is reflecting, with traders pricing in potentially not even a full rate hike by the end of this year, Vonnie.
Justina, thank you so much. Justina Lee there in London, and so much repricing for so many reasons this week, right? Not just central banks, also the AI narrative, the memory chip maker narrative. And as you can see, going into the Friday session, we are lower, but obviously the Korea sell-off, as it typically does, not impacting the US as much as it did 2 days ago. And that was before Micron earnings, and so there was a lot more to be nervous about. We are seeing NASDAQ 100 futures in particular point to a lower open, but not as much as you might anticipate. And bear in mind, it is a Friday. There will be de-risking going on. We've also only got 3 trading days left in June. And it's been the busiest month for trading in history, which probably doesn't come as a surprise to anybody given how many records we've been setting and also just the amount of churn in this market. By the way, Micron did manage to eke out a record yesterday. So as you can see, we're primed for a little lower start. We'll see if that continues throughout the session. Bond yield-wise, not seeing too much movement. We are seeing the 2-year down about 3 basis points at 408 and not movement at all at the back end. So a slight widening of the curve, but really just reaction to that data yesterday, which came in at consensus according to the PCE, and also personal spending and income. Not too much of a surprise there. Let's get to some individual movers now. With that, we'll get to Chloe Melly.
Good morning, Vonnie. We are seeing the chip sector in the red this morning, and there's a couple of things hitting that sector. First of all, we've got those concerns around those memory prices and the sustainability of this AI demand. And then at the same time, there is also this potential delay to an OpenAI IPO. And so both of those things are dampening sentiment, and we're seeing that reflected on that board here with Intel in particular in the red. Moving on, but staying within this chip making sector and on semiconductor is also in the red this morning before a more company-specific reason. It has bought a company called Synaptics, which operates in the smart devices sector. And some analysts and investors are concerned that this could actually be a distraction for the company while it tries to push more towards this data center AI business. And so we're down actually almost 13% this morning. And finally, Rocket Lab is in the green this morning after securing a new NASA contract. It has been selected to provide 2 launches for 2 missions. And so we are up about 1% this morning for that space company.
All right, Chloe, thank you so much. Chloe Melly there in London. She'll be back later in the hour. Also coming up this hour, investors slightly pulling back their rate hike bets for the year after the latest inflation print. We'll discuss with Priya Misra of JPMorgan Asset Management. But first, tech stocks under pressure after Apple announced it would raise prices for its products, fueling concern higher costs would hurt demand. Memory chip giants like Samsung and SK Hynix fell, sending Korean shares lower, triggering the market's second trading halt this week. The sell-off now bleeding into US and European markets. But as I said, not so much today. Joining us now is Tom McKenzie. It's also the fact that they're planning on spending, Tom, which always has a little bit of a chilling effect on investors. But ultimately, it's supposed to be good for these companies, right?
That's right. They have to meet the demand that they say they are continuing to see. And we're seeing that reflected, of course, in the pricing for their products, particularly around high bandwidth memory. So they are planning to spend and spend heavily, according to reports out of South Korea. We're expecting to get the details from SK Hynix and Samsung on Monday. Samsung alone, according to some of those reports, could be committing to spend about $650 billion over the next decade. And a lot of that will be to meet the demand that they are seeing. But you're right, for today at least, it seems that the Korean investors met that with some caution. But it was, of course, paired together with that news about the Apple price increases and greater skepticism about what that does ultimately in terms of the AI trade. Does that slow things down when prices are being pushed up? Component prices are so high that Apple, even with its sophisticated supply chain, has to push up prices in some products up to about 20%. Almost every single one of their products across the product line seeing price increases from Apple. And you had this kind of split screen moment, of course, yesterday in terms of Micron shares rallying double digits, Apple falling about 6%. So all of that's kind of reflected in the session over in Asia, with the Kospi falling pretty hard, down about 5% by the end of the close. Samsung and SK Hynix, of course, getting hit as part of that. There's also the leverage story, retail investors as well in South Korea, that has added to the volatility that we've seen now, that's become almost kind of regular for the Kospi in terms of these wild moves. And certainly this week has been very pronounced in terms of the moves across the Kospi.
Tom, SoftBank seems to be the best way for investors to express their disappointment on this report that OpenAI may be delaying its IPO, but it's just by a few months, and, you know, SoftBank has been waiting a long time. So why are investors so concerned? What are they expressing here?
Well, you're right. SoftBank is essentially the proxy, the publicly listed proxy for OpenAI, given that its investments in that company, that frontier lab, will total about $65 billion by October of this year. So it has played that role, and it's played that role again today on the downside, on the reports from the New York Times that the IPO could be kicked into 2027. Apparently, according to these reports, Sam Altman really wanted to get that $1 trillion valuation for the company, and some of the bankers working on that deal, working on that listing, saying, well, it's unlikely you're going to get a valuation of that level given some of the concerns in the markets right now. That again, according to reporting from the New York Times, suggesting that the IPO could be pushed into 2027. Altman determined to get that $1 trillion valuation. So the fact that has been delayed potentially as a cause of concern. Essentially, SoftBank is not going to be seeing a return on investment, on their investment in OpenAI as quickly as many of their investors would have hoped. Seems to be one of the key downsides. SoftBank falling amongst the biggest drops that we see in kind of since in a little over 2 years, or close to 2 years. So it dropped about 12% by the end of the close. So a really significant move for that company.
Tom, thank you so much. Tom McKenzie, host of Bloomberg Tech Europe. In the Middle East, ships are flowing through the Strait of Hormuz in both directions without major delay. There was an attack, though, on a container vessel, a Singaporean-flagged container vessel. A White House official saying it's too soon to say who had struck the ship. Joining us now is Bloomberg's Abir Abu Omar in Dubai. What happened here, Abir? It came out of nowhere, and it was very unusual given that even at the worst of times, we didn't see that many direct attacks on ships.
Yeah, good morning, Vonnie. The first attack, actually, since the interim deal was reached between the U.S. and Iran. Now, it's worthy to note here that this is a Singapore-flagged ship that was attacked. It suffered some damage to its structure, but managed eventually to make its way out. Now, as you mentioned, no one is taking responsibility for this attack. The Wall Street Journal did report earlier that it could very well be the IRGC attacking the ship because it didn't stick to the route that Iran had mapped out for ships to go through the Strait of Hormuz. The U.S. side is saying it's too early to point fingers, and so you're getting no one taking responsibility yet, but it could very much be Iran. The ship is believed to have crossed through the coast of Oman, which is not the approved upon route that ships through the Strait of Hormuz have been taking over the past week or so. Now, something else that is worthy of noting, Vonnie, is that we're still seeing movement in the Strait of Hormuz. Yes, it is a blip along the way, and it's caused some ship owners to revisit their routes through the waterway. But for the most part, we're seeing still movement going through the strait. For the time being, it's about 20 ships or so, a little bit more than that, going through the Strait of Hormuz. That compares with about 6 ships during the heights of war. But in essence, the Strait of Hormuz in general is a sticking point in the MOU negotiations, Vonnie. The U.S. and Iran maintain this back and forth over Iran wanting to toll the Strait of Hormuz. Once the 60-day ceasefire negotiation period goes through, the U.S. says completely unacceptable for that to happen. Just a few minutes ago, we get reports about President Emmanuel Macron hosting Oman's Sultan Haytham bin Tariq to talk about the mechanisms about tolling the Strait of Hormuz and saying that it is an international waterway that should be free of tolls. So this is going to be a contentious point over the next 2 months or so to be discussed, Fonny.
All right, Abir, we will watch for sure. Abir Abu Omar in Dubai. Now to other top stories trending on the terminal this morning. Volkswagen is reportedly planning sweeping job cuts and factory closures. According to business publication out of Germany, Manier magazine, the automaker could slash as many as 100,000 jobs. The Porsche and Audi owner currently employs 657,000 people. The U.S. Army has struck deals to build critical mineral processing plants on military bases across the country. It's a first-of-its-kind initiative by the Trump administration to boost domestic production of key materials. Realloys, Titan Mining, Ioneer and Energy X are among the companies that have reached agreements with the Pentagon. U.S. Commerce Secretary Howard Lutnick intervened to delay the opening of the Gordie Howe International Bridge to get a larger cut of the toll revenue. That's according to Bloomberg sources. The bridge, which connects Michigan and Canada, had an opening ceremony planned for last month when Lutnick stepped in to renegotiate terms. Coming up, President Trump says the U.S. doesn't want anything from Canada or Mexico, but America's farmers need the export markets. That Wall Street Week story is next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. The deadline for the US, Mexico and Canada to review the USMCA is approaching. The three nations have until July 1st to renew the existing agreement. But President Trump has said that he would rather not have a trade agreement. One sector that benefits from and relies on the USMCA is agriculture. Wall Street Week brings us that story.
If U.S. trade policy overall has been rough on farmers, the one bright spot has been the USMCA, which has shifted exports from declining Chinese business to growing business with Canada and Mexico. Since 2023, China has slipped from the top export market for U.S. agriculture to third, with Mexico now top and Canada second.
Since NAFTA to today, since it was inception to today, U.S. ag exports to Mexico and Canada have grown about 600%.
Tom Halverson is the CEO of CoBank, which operates as a farm credit bank.
The most important thing I can say about that is, this has been a massive trade liberalization success in the agricultural sector. To me, moving backward would be to reverse that trend, increase tariffs, increase market barriers, drive our closest neighbors and colleagues in Canada or Mexico to retaliate against us in a way that would harm our access to those markets. Just remember, these are the two largest markets for American agricultural exports in the world. They happen to be our closest neighbors and where we have the greatest ability to incrementally grow our volume. The more successful and the more prosperous Canada and Mexico, the more prosperous and successful is the United States in general, but particularly American agricultural producers.
From the point of view of an American farmer, what's the best they might hope for and what's the worst they might fear coming out of the negotiations?
I think the best that we can hope for here is over the next 16 years, if we get a push out for 16 years of a renewal, that would provide a great deal of stability and confidence for our agricultural producers to say, hey, this is a framework of trade that's going to last and be stable, and I'm not going to have any unexpected negative consequences for quite some time. Therefore, I can have some confidence in making long-term investment decisions.
One of the destinations for those exports increasingly is Mexico. It is the largest export market for U.S. corn. According to USDA data, the U.S. exported almost 4 million tons of corn to Mexico in the first 2 months of the year, an increase of around 11% from the same period last year.
It's like 6.5% of the total production goes to Mexico alone. The two countries combined, when you look at corn and corn products, it's about 1.8 billion bushels of corn, which is the entire production of the state of Minnesota, or again, that carryout that we have. So if we don't have this relationship of the three countries, we're looking at doubling our carryouts and then finding a situation where we just simply won't be able to dig ourselves out of that kind of a hole. So it's a really, really big deal. It's the gold standard in my mind. It's something that we could replicate across the world.
Watch this special USMCA edition of Wall Street Week. That's tonight at 6 p.m. in New York, 11 p.m. in London. For more on trade, joining us now is Bloomberg's Brendan Murray. So, Brendan, we have an agreement with the EU. Apparently, we've got something before the deadline at least. What's next on the trade agenda?
Yeah, well, the big date now is next Wednesday, this July 1st virtual meeting that the U.S., Mexico, and Canada are going to have to decide on the future of the North American Free Trade Agreement. Now, there are basically three options. They can decide to extend it out into the future with no changes. They can come up with no consensus, and that would trigger an annual review, which would create all sorts of uncertainty for businesses. Or they could come up with something in between and extend it with some targeted changes pointed out by the U.S. Trade Representative Jamieson Greer, looking at things like rules of origins, not just for autos, but for other products, electronics and industrial goods. And they are also going to want to address some of the other sorts of barriers that the U.S. administration has pointed out, like the dairy industry in Canada. So there are going to be some issues that Washington wants to bring to the table, and we'll see how it goes next week. But that is the main thing that could decide the future of USMCA one way or the other.
Is President Trump likely to hold out for better deals on all fronts, or are we almost at the point where he could be actually quite happy with something?
Yeah, well, we've seen President Trump stake out his hard line. I don't need USMCA. I might not sign the deal, and that's pretty much his calling card in any negotiation. He comes out with kind of an extreme approach, and then negotiations play out from there. So it's unlikely that the president is going to walk away from USMCA. It's so important to U.S. agriculture and to the automotive industry, and heading into the midterm elections. Those are two constituencies that feed right into his base, and he's not going to want to upset them, particularly economically. So we'll likely see some sort of compromise or a pathway to a compromise hammered out July 1st, just Wednesday of next week.
All right, Brendan, thank you so much. Brendan Murray, our trade czar in London. Coming up, your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times reporting on Venezuela's 2 deadly earthquakes. Rescue workers digging for survivors and trying to reach remote hillside towns. Authorities have now confirmed 235 people dead and more than 4,300 injuries. The Times says the long road to reconstruction will test how much support the Trump administration is willing to provide as it continues to turn Venezuela into an economic protectorate. Next up on the Financial Times, SpaceX has told investors it plans to launch a new Starlink mobile service for US consumers. The move could upend the multi-billion-dollar mobile phone market. The FT says Starlink would need to build a new retail offering by selling mobile contracts to customers competing directly with Verizon, AT&T and T-Mobile. And finally, the Wall Street Journal reporting a top Department of Justice official telling staff he wants to avoid antitrust trials, preferring to settle them. The Journal says the posture could weaken the department's ability to challenge anti-competitive mergers and could put settlements of monopolization lawsuits on a faster track. And those are your front page headlines. Let's take a look at the markets as we head into the third last trading session in the busiest month for trading US equities ever. We have Nasdaq 100 futures very much off their lows, but just taking a little bit of de-risking and running with it today after a wild week. Little softness to the dollar, no movement at all after the PCE data. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. AI reality check. Apple's cost concerns biting its chip suppliers and peers, dragging global stocks lower. Will that tech volatility hit IPO sentiment? SoftBank shares dropping on a report OpenAI may be considering delaying its offering. And traffic holding its course in the Strait. Oil does continue to flow as tankers move through Hormuz in spite of that ship attack. So we did see another awful session in Korea, but markets aren't as concerned with Korea today as they haven't been in the past. It was really just that earlier week slide that markets responded to, and that was pre-Micron earnings. We are, though, seeing some de-risking with Nasdaq 100 futures pointing to a decline of more than 1% at the open. Not as bad for the S&P or the Russell 2000. It is the third last trading day in June, of course. It might be time to take some profits if you've made them. By the way, Micron did eke out a profit. Obviously profits, but it eked out a record yesterday. Down across the board, more so at the front end after the PCE data, the personal income and spending data as well. We'll be speaking about that in a moment. And then let's take a look at oil, because it does continue to decline even with that attack. We're still below 70 on WTI and at 72.50 now on crude. Bitcoin was well below 60,000 earlier in the session and yesterday. It's just a tiny bit above that now. Let's get to some individual movers. We'll get to Chloe Melly in London.
Good morning, Bonnie. We are seeing a fair bit of weakness in that chip sector in pre-market trading this morning. There are some investor concerns around memory prices and shortages after some significant price increases on some Apple products. And there's also the concern around OpenAI potentially delaying its IPO to next year. And so both of those things, both of those updates are really dragging down those shares across that sector. And we are seeing Intel in particular, as we can see here on the board, down almost 4% on the back of that. Moving on to a semiconductor, another chip maker, but it is down this morning because of a more company-specific reason. It has bought another firm called Synaptics, which operates in the smart devices sector, is more on the consumer end of the market, and therefore investors and analysts are concerned that this might be actually a distraction, that the deal might be a distraction away from this focus on data centers that the company has had recently. And so we're down quite significantly there, as I said, about 13%. And finally, Rocket Lab is up this morning after securing a new NASA contract. It has been selected to provide launches for 2 separate space missions. And of course, that is quite beneficial for that company. And we're up about 1% for Rocket Lab this morning.
Chloe, thank you so much and have a wonderful weekend after an incredibly volatile and distressing week in some ways. Chloe Melly there. The bond market pulling back on Fed rate hike bets. This after the latest PCE data rose less than could have been. Joining us at the desk is Priya Misra, Portfolio Manager of JPMorgan Asset Management. Priya, you're just out with your investment quarterly. How on earth do you come up with a new investment quarterly with Kevin Warsh only just appearing at the Fed and with all sorts of cross currents in this market.
Exactly. So we spent the last few days in Columbus debating all of the cross currents, to your point. I mean, are we at the brink of this productivity surge? Are we at the brink of a Fed regime change? So lots of debate around the macro as well as the micro. What we're seeing is a resilient economy. And we're really not seeing the signs of this broadening out of inflation. So we actually think that the Fed is sounding tough, they're sounding credible, independent, but our view is that the inflation data is actually going to come down. A lot of that inflation surge is really supply-led. We're not seeing that demand-led inflation. So our sense was the Fed's likely to stay on hold. Credit risk, and this is where the company bottom-up analysis actually shows us extreme resilience in the corporate sector. I mean, there's an AI theme that was underlying all our discussions. But, you know, when you look at, how a company is able to, are we overbuilding? I think that was the big question around AI. We really don't think that's happening. Company fundamentals, whether it's leverage ratio, whether it's margins, all looking strong. So we like credit risk. I think the way we came away from all of this was resilience, but some vulnerability around AI, and therefore owning some credit risk, high quality credit risk, owning some duration. I think that's how we sort of came away from this, but lots of deep dives on the top down as well as bottom.
How and when are we going to know if there is overbuilding, right? And, take, for example, Micron's earnings this week. It was supposed to be a good thing that margins were in the mid-80s. It suddenly may have turned into not so great a thing because who's going to suffer from handing over profit to Micron, right? Everybody else.
A lot of this is about pricing power. So are we seeing a transfer from the hyperscalers to the semiconductors? Who's next in that value chain? So what we're looking at is, the margins just moving across the AI infrastructure world. Is that actually showing up in consumer prices? I think that's why the Apple news was, that, or the market didn't love it, because now that's when it's actually showing up in prices. Where's demand destruction? So I think it's the pricing power of all of the components of the AI infrastructure. I think that's what the market's trying to figure out, along with valuations. And this is when we take a step back and say, let's look at where our valuations. The market's already pricing in rate hikes. So even if the Fed has to hike a few times, well, the market's pricing in over 50% chance of that scenario. So when valuations are attractive, sometimes, you have the cross currents, but if it's in the price, there's an opportunity to own.
So you've been writing, the key question is whether the strength in the economy will be accompanied by inflation or productivity. We are in the latter camp, and I've known that for a while. Kevin Wart also believes that productivity is on the way, that America can't but get more productive as time goes on, right? But what if productivity picks up but inflation doesn't cool? At that point, what do you prioritize? And what happens? Because inflation is just going to keep eating further.
Right. I think the Fed will have to do a deep dive, and there's a task force for this. There's a task force for a lot of things. One is on inflation. So is core PCE what they're looking at? Is it exactly 2%? I think they're actually doing a deep dive. What should be the level? If I think the world is prioritizing resilience over efficiency, maybe you're supposed to look at, a slightly higher inflation target. Now, he said he was not going to look at that, but is it a different measurement of inflation? I think they really want us to look at the underlying components of inflation, demand versus supply, and maybe that will help them square the circle. The other task force around AI, productivity, jobs, I think that's where I think this trade-off for the Fed might become easier. So the Fed is doing a deep dive, I think rightfully so. If the economy is changing, maybe we should be looking at different measurements, but I do think the Fed is credible. So to your point, even if you're getting that pickup in productivity, but you're seeing core or other measures of inflation, particularly what I'm looking at, wage inflation, inflation expectations, service inflation outside of software. If you're starting to see a broadening out of inflation, I think this Fed then will have no choice. I think they will hike. But at that point, it may not be an entire hiking cycle because the starting point of interest rates is already higher. So maybe they just go 50, 75 basis points.
You also point out that of the 9 officials that penciled in hikes for 2026, you believe that many of them are not voters, right? So maybe at the margin, their voice matters just that little bit less. Right. You also say that the market is actually confusing a lack of forward guidance with a hawkish reaction function. How did that come about?
I think Chair Walsh doesn't want to give forward guidance. I think that's clear. But the market wanted to hear his outlook on the economy and how would the Fed respond to different economic outlooks. And we didn't get that. Now, is that a task force that will tell us that? Or are we going to listen to other Fed officials? I do think at some point Chair Walsh is going to give us a sense of the reaction function. I think the market just jumped to inflation's high, the Fed doesn't want to give forward guidance, therefore they will hike. I think a sense of if headline inflation's coming down, and look at oil, we're going to get some negative headline inflation prints. Is that going to be enough? Or what's the bar to hike? I think we're going to hear more from Chair Walsh over the next 6 months as we try and understand that reaction function. I do think the market sort of misunderstood his lack of forward guidance for this. It's all about inflation. Well, it's all about inflation if inflation is broadening out. But they are keeping an eye on the labor market. Next week's key. We're going to get JOLTS. We're going to get the labor report. Let's see if the rise in payrolls is actually resulting in a tightening labor market. Then I think the Fed is talking about hikes. If we see a cooling there or no sign of wage inflation, I think we might hear the Fed being a little bit more patient around hikes.
What about the curve, Priya? Does anything look more attractive? Are you getting ready to make any changes in positioning? Do we stay as flat as we are?
So that's been very interesting that the curve has flattened as much as it has. All the hikes have really been priced in the front end and not the long end. And that tells me the market's trading inflation and not a higher neutral rate. So I think the curve looks very fair. I know it's flattened a lot, but really the curve is all about does the Fed deliver on the rate hikes? And I think under Chair Walsh, we're not going to hear that. So I think the curve likely market keeps some hikes in there because what if inflation broadens out? What if the Strait of Hormuz closes again? So I think that's why the curve, we'd rather be slightly long duration than have a curve steepener. The two are similar trades, but I think the market can keep some hikes. It's the longer end. 430, 440, those are attractive levels.
Yeah, and the 30-year yield seems to be completely capped.
Exactly.
It's a real change in environment, isn't it?
I think that's where the technicals of positive bond inflows is helping anchor that long end.
Fascinating. Priya, thank you so much for coming in this Friday. An incredible week, and we're capping it off with Priya Misra of JPMorgan. Now to other top stories trending on the terminal this morning. Traffic continues to move through the Strait of Hormuz despite an attack on a Singapore-flagged container vessel. It was the first since the interim US-Iran peace deal was signed, even though the incident does not appear to have derailed the slow return to normal shipping traffic. The Pentagon has quietly revised its targeting doctrine, opening the door to the use of AI in wartime decisions. Bloomberg reviewed the changes to the document, which is not classified but hasn't been released publicly. The revised principles say AI can initiate actions with human monitoring, the latest example of the Pentagon's push to adopt the technology. New York City's Rent Guidelines Board has voted to freeze rents for around 1 million rent-stabilized apartments. The freeze applies to both 1- and 2-year leases. It marks the first time longer-term rental agreements have been frozen. The move is a major political victory for New York City Mayor Zoran Mamdani. Freezing rents was one of his central campaign promises. Coming up, focus on farmers. The Trump administration bids for more aid for the agricultural sector as it seeks to bolster support from one of its key bases. This is Bloomberg.
And we have another one, a new market coming up, and that's called the lovely country of Iran. It's a beautiful place. Would anybody like to go there? The Islamic Republic of Iran, they're having a hard time with food, and we're going to be taking some of their money and we'll spend it, and we're going to be buying wheat, soybeans, and corn, a lot of it. And that process is going to be starting pretty soon. It's going to be pretty big, too.
President Trump wooing American farmers with an $11 billion aid request to Congress and saying Iran may be a new market for U.S. agricultural products. Jonathan Tamari of Bloomberg Government joins us from Washington. So this is funding that he wants. It's in addition to defense spending, more money for that and so on. Jonathan, what are the chances and will it be enough to satisfy farmers?
That's the big question, is how much this actually helps farmers. And there was some mixed reaction initially. There are some people who are saying, yes, we appreciate any aid we can get. But on the other hand, this is trying to offset some of the president's other policies, like tariffs, like the war in Iran, that have made things very difficult for farmers. and they're a very important political constituency to him individually and also to Republicans running for House and Senate, particularly in a state like Iowa, a major agricultural state that also has a very important Senate race this year that could be competitive. So it's very important politically. It's unclear if this money will actually come through, partly because it's attached to a much larger package that is mostly for military funding. And Democrats have some concerns about that because they don't want to be seen as helping to pay for the Iran war even as it winds down. So it's not clear if this is actually going to make it through Congress because it's a smaller piece of a much bigger package.
Yeah, it's so complicated. Jonathan, also this critical minerals effort. So Trump says now that U.S. Army bases are going to be used for processing plants. How would it work, even if they become operational in the near future? What are they supposed to do? Do you transport these minerals that have been mined to Army bases? And then what does the Army do with boron or graphite?
Yeah, I mean, I think this is part of a very long-term play that the administration is making, where they had a lot of frustration at the way that China's control of these rare earths was able to kind of combat the president's tariff regime and kind of fight him to a draw on that. So I think one of the issues is that a lot of times when the U.S. is trying to expand its own production, there's opposition from local residents to having these kind of mines in their neighborhood. So putting it on military bases maybe eliminates part of that. And yes, the military would have access to some of these things. So it's a really long-term play. I'm not sure exactly. I don't know we know the details of exactly how it's going to work, but it's one piece of an effort to try to develop more of these minerals in the U.S. And this is one place that they can try to do it maybe more quickly than conventionally.
All right. Well, finally, Howard Lutnick getting involved with the US-Canada bridge. Why did he stop it? It was all ready for celebration and for inauguration.
Yeah, this has been a long-running saga where there's a competing bridge that has some ties, whose owners have some ties to the Trump administration, has kind of opposed this new bridge opening up. As you mentioned, invites were sent out. It was all set to go. Canada had paid for the construction, and they were going to recoup some of that money through tolls. But now, according to our colleagues, Howard Lutnick, the U.S., wants a bigger share of the tolls for America. And so it's stalled the delay. It's really an incredible saga over this, and just one small sign of the tension between the U.S. and Canada that is two countries, obviously, that have been historically so closely aligned, and a state, Michigan and Canada, that share a lot of commerce and connections just by being neighbors.
All right, Jonathan, thank you so much. That is Jonathan Tamari of Bloomberg Government. Turning back to tech, global stocks lower this morning following a sell-off in memory chip giants like Samsung and SK Hynix. That's after Apple announced it was raising prices on their products due to the chip shortage. Also because these companies are going to be spending, and apparently there's reports they'll be announcing that spending Monday. We did have a circuit breaker triggered earlier today in Korea again. It's becoming a regular thing now, 5 times this year, only 11 times in history. So that'll tell you how much it's speeding up. Out of those times, though, the next day, in all but one case, we had a massive rebound. Joining us now is Bloomberg's Neil Campling. Neil, why are SK Hynix and Samsung not benefiting from Micron's pricing power? You would think that that would augur well for other memory chip makers, and also the fact that they're spending so that they can make more of what sells.
Yeah, morning, Bonnie. It's a great question, but I think the second part probably answers the first part. They will be benefiting from the same trends that Micron is benefiting from, given that really the three companies dominate the memory market. But I suppose the point is that because of the demand-supply imbalance, it's likely they're taking a decision to massively ramp their CapEx plans. So the question then will be, well, can demand continue to consume supply if it's going to increase substantially in the future? And the numbers being talked about are just huge. I mean, the Samsung numbers that is likely to be announced on Monday of AI investments, it could be about $650 billion for the next decade, which would be a record, obviously, for any Korean company and for Samsung. And it's just enormous numbers. And it may then come down to the point about what we heard from people like Jensen once earlier this year, that some of the AI chips going forward will actually have less memory, whether that's because of tech improvements or whether that's because they just can't get enough supply. Yeah, that could create a headwind from something that's been a tailwind until now.
Gosh, there's so many directions this could go. Over in Japan, SoftBank tumbled. It's a way for investors to express disappointment, I guess, that OpenAI's IPO might be getting delayed, according to reports. I mean, what's a few months after so many years? And Masayoshi Son doesn't need the exit.
Yeah, he may not need the exit, but of course he did miss out on the SpaceX investment. But on this occasion, I suppose the risk, the worry is that what happens to the OpenAI ecosystem in the meantime, because coming to market is also the easiest way of raising cash in many respects. And let's remember that OpenAI burned through a lot of cash. They had a net loss last year of over $38 billion, and that was an 8-fold increase over the previous year. So they want to stay ahead of the tech curve. They want to invest in the AI ecosystem and stay competitive with companies who are raising significant amount of money, such as Alphabet or Anthropic, who are really sort of clicking to their heels in terms of overtaking their revenue run rate. Then OpenAI kind of delaying an IPO could be seen as a negative, not just for SoftBank, but for the entire OpenAI ecosystem.
Well, we'll see how it gets digested in the US session today. Neil Campling, thank you so much. Now to automakers. Volkswagen looking to cut as much as 100,000 jobs and closing plants, according to German business publication Manager Magazin. Let's get more now with Bloomberg's Elisabeth Behrmann in Munich. She leads Bloomberg coverage of the auto industry in Europe. How is Volkswagen making such a turnaround? Elisabeth, is this a Germany story, a combustible engine story?
So this is another step in a very, very long story of VW trying to slim down, become more efficient. But of late, in the past few months, it's become very clear that existing efficiency measures aren't enough to stay competitive. If we think back to 2024, they already had this plan in place to cut 50,000 jobs, which is already a massive reduction, but avoiding plant closures. So by the looks of things, the plan for plant closures is back on the table, and the CEO is seeking to double the number of job cuts. What's really important to remember in this is that this is a plan, and it still needs to get past the supervisory board. And anyone who follows Volkswagen knows that Labour leaders hold the cards, because also the state of Lower Saxony is present on the supervisory board. So often decisions get watered down. I think this is about putting another new red line in the sand and see where the eventual decisions to gain efficiencies land.
All right, Elisabeth, thank you so much for that reporting. Elisabeth Behrmann in Munich. Now a look at what's ahead for your Friday trading session. First up, some data, US wholesale inventories at 8:30 Eastern Time. Then Fed speak. Minneapolis Fed President Neil Kashkari speaking at 11:30 a.m. And central bank officials gathering in Basel, Switzerland for the 25th annual BLS conference. Some pre-market movers. We get some chip makers lower. We're looking at Nvidia, but you could really pick any of them. Tech volatility pulling global stocks lower. On semiconductors, slightly different story. It's buying Synaptics. It's a $6 billion deal. Synaptics was higher in pre-trading. And Rocket Lab, it got a new NASA contract, and it rose about this much in the post-market last night. And we'll see how it does today. It's up more than 120%, obviously, year over year. This is your macro picture. Could be a down day for the Nasdaq, but, we should have some faith. This is Bloomberg Brief.